The global financial and monetary system is at a crossroad. The world economy was on a path of recovery when it got roadblocked by COVID-19 and two regional wars. This caused the African economy to lag growth, furthering the divide between developed and developing countries. A call to action is in the making from African leaders in both the private and public sector to the international monetary community for the reconciliation of global financial systems and restructuring financing models fit for Africa.
All these, ladies and gentlemen, call for a mixture of public and private finance, or what we are now calling blended finance, to sustain and expand economic growth. It is true that Africa's fiscal revenue to GDP remains weak, as you may have heard from our very own president here in Kenya. We can continue to raise taxes, which we are, and make concerted efforts to boost collection. But so long as most of that tax goes to pay debts, we have little hope to close the financing gaps I just mentioned here above. And that is why we are calling for a new international financial architecture. To quote our president, His Excellency Dr. William Ruto, Africa has $640 billion in outstanding debt and pays nearly $70 billion in interest every year. It would only be fair for us, he said, to have a financing mechanism that treats us on an equal footing. Let us change the discourse. The discourse requires that Africans be on the table to not only have a say on what they want, but also, and this is important, we must contribute our fair share. Are we, therefore, topic of conversation today, leading the charge on blended finance by pulling together resources from governments, multilateral institutions, philanthropic organizations, and the private sector? We can unlock new sources of funding while reducing risks and enhancing returns for investors. Are we utilizing sustainability-linked instruments to not only mobilize capital, but also direct it towards high-impact initiatives that address pressing social and certainly environmental challenges? Ultimately, ladies and gentlemen, the goal is to create more diversified and resilient financing ecosystem that can support Africans' long-term development goals. By embracing alternative financing solutions and harnessing the continent's vast potential, we can build a brighter future for all Africans.
In order to understand what requires recalibration, or I'll say transformation for that matter, I would like to focus on two aspects. So the first aspect is who are the stakeholders of this, or the global financial systems. And the second aspect, of course, because I'm a guarantor, will be the need to recalibrate risk perception on Africa government, and Africa private sectors. On the first sector, the three key stakeholders of this global financial system, I see it. The first one is the supply side. At the supply side, I see the Bretton Woods institutions, so IMF, World Bank. I can see all the DFIs, the commercial banks, and the private equity fund, and all the other financial institutions. At the demand side, I'm seeing the sovereign, the government, the private sector, and you and me, the consumers. And lastly, the third category of stakeholder, regulators and policy makers. The regulators and policy makers must in Africa speak louder. Okay, speak louder, but because we receive international. There are some rules, international rules that are set to fix some challenges that are not African challenges, but as they are set at international standard, African countries are obliged to follow. So we must speak louder, or I like your presentation, we must present our business cases to demonstrate that we have to think global, but we have to act local, even on policies and regulations. If we use technology to improve the collection of our taxes internally, in 20 years' time, we will be able to invest in debt, in private equity, in our economy, in local currency, and so just let's do it.
Africa's position on the reforms of the global financial architecture is predominantly constrained by a lack of affordable, reliable, and sufficient finance, juxtaposed with debt crisis in some nations and compounded by extreme vulnerability to climate change.
We believe that a fairer, much more nimble, much more agile international financial architecture is necessary. Initially, when we pushed for this conversation, it looked far-fetched. I can confirm to you today that everybody has come round, and the international community agree with us, from the US to Europe to China, that in fact, the current international financial architecture is not fair. Some countries access development resources at 1%, others at 10%. And that is 10 times. So we're saying on average, some countries access development resources 5 times more than in other countries. And because of that realization, and because it's now accepted globally that there is something wrong and there is need to recalibrate the international financial architecture, we have put proposals on the table. For example, at the Africa Climate Summit, we said we must have a transition. We must unlock the huge potential of renewable energy so that we can power the engines of green industrialization in our continent using the enormous renewable energy resources that are in our continent.
Shaping Africa's economic future needs to cut through its high debt to GDP ratio, which constrains economic performances. The current global financing models overshadow Africa's achievements to improve its growth and to become more globally competitive.
We don't have a demand issue. There is actually funds looking to get deployed in our market. And Kenya in particular is actually very, very attractive. What we have is a supply issue. And the reason I say that is because they, for example, said, we are very interested in investing in sustainability-linked instruments. We want to get exposure to ESG-related projects. But either they are not there, or the ones that are there, the size is too small, or they're not structured right. So, to respond to your point, Abby, for NSC, part of what we want to do is really work with the ecosystem to actually be able to originate, to support the origination of projects that are aligned with what investors want, and we know sustainability is one of them. And in that sense, obviously, we'll be going for the typical instruments that you already know, so green bonds, as an example, sustainability-linked issues. Would be very happy, for example, to discuss gender bonds. And of course, there's also conversations around carbon credits and what that means from a financing perspective.
The question is, when I look at things like regulation, I put it in 3 very quick buckets. One is foundational, what we already have that is governing the banking system. The second one is catalytic, which is what now is, pushing innovation for startups and all that. But I think what is lacking in our regulations, in our policy, is what we would think as aspirational regulation. A regulation that tells us this is where we want to be 20, 30 years from now. We're yet to see that. The only way we can do this is if we have participatory policy making that allows the people that are leading this conversation to be part of that process. Thank you.
We are aware that the government of Kenya and Uganda signed, I think, an memorandum of understanding about two major projects. One is an extension of the oil pipeline from Eldoret all the way to Kampala. I know in the past you have been doing financing the pipeline using what you call a consortium of banks and so forth. I would like you to consider talking to us as pension funds. And you come up with an instrument, and I want to assure you, challenge us. We have come together under an association called APTAC, which brings all the trustees of the funds, and which I'm the president currently. We are ready to engage, and you don't have to go outside Kenya to get your money. So I would like to challenge you. And equally the same, we have other projects in the energy sector. There is a shortfall of transmission capacity for our country. Anybody who is wants to get involved in that area, kindly come to us. We're ready to partner to finance transmission across our country, because those are real impactful developments. And then, of course, we have the fintech or the IT sector, the networks across the country. That's an area, so long as it is packaged properly. So the challenge as which you have thrown to us, that are we ready to invest? We are ready. But, of course, we want to see properly packaged projects and which we can then invest in. Thank you.